Hey folks, welcome back to another options challenge update, and it's been quite a crazy week. This is looking at Google's weekly chart. You can see last week was this huge green candlestick going up, and the week started down here at around $86, and I thought it probably won't go down below 83 because that was the low from the previous week, and it probably won't go over 96 because we had some pretty strong resistance up here. So that's where I put my call up here at 96, and what do you know, the stock went up like 12% in a week and it closed just over 96. So I had 200 shares that were called away. But here's what it did to my progress. I went up by almost 6,500 in just a single week. And that was because I had 500 shares. And when each share goes up $10, that's quite a lot of money. So the previous week, if you remember, I lost a lot of money on paper anyway, because I had to buy 200 shares at $92 on average. And then I basically got rid of those 200 shares once the stock moved up, and those got called away at 96. So that's a $4 spread between the two times 200. I basically made an $800 profit from that transaction. It's almost like I'm wheeling Alphabet because I'm buying the shares as my puts gets in the money, and then I'm selling the shares as my calls get in the money. And because my call strike was higher than my put strike, I made a profit that way. So now I'm back to 300 shares because last week I was at 500. I sold 200. My average cost is still 101, so that hasn't changed. Google closed the week at 96.43. You can see that's $10 higher than the previous week. And my realized gains is actually negative because I bought a lot of shares, as you can see here, when the average cost was quite high. So because I sold at 96 and my ACB is 101, that's $5 per share of loss. So from 200 shares, that's $1,000 in losses. But overall, I am up on the week. And here's what the chart looks like. So that huge move up was all thanks to the $10 gain of Alphabet last week. And I'm basically now even higher than week 14. I was at 584 and now I'm at 751. So I haven't been at this level since week 8. So if we get another like $6,000 move, let's say this week, then I would be up to like $7,000 already. Now, last week I wasn't sure what the price was going to do. That's why my premiums here was pretty low. I was being quite conservative, but this week I want to be a bit more aggressive because we basically got confirmation that this support line did hold. So 2 weeks ago, the stock basically bounced off of this blue line and closed above it. And last week, we had this huge green candle. So that tells me the stock is still respecting this blue line. So for this week, we might go down, but I don't expect it to fall below this blue line. In fact, we don't really have a lot of economic data coming out. There's no earnings. So I wouldn't expect the stock to move too much. If we look at the option chain, you can see the IV has come down this week to 37. Last week, it was like 45. So the market doesn't expect the stock to move a lot as well. So let me jump into the daily chart and let's take a look at what I can do for this week in terms of selling options. Well, the stock is down a little bit today. We are still within this overall bear channel. We have extended below the bottom of this, but I guess I could just pull this down a little bit if we're using these candles over here as the bottom and over here as well. Right now, it looks like we are getting close to the middle of this blue bear channel. The short-term momentum is going up, so I would expect the stock to at least touch the middle right here at around $98, $99 later this week, but I don't think it's going to go a lot higher this week just because we don't have a lot of news. So if I put a horizontal line around here at 105, that seems to be pretty good resistance because you can see previously the stock has bounced off of this line as support, but once it fell through, it was met with the resistance here. And we just had a $10 move in Alphabet in the previous week. That's what all of this was. And I'll make this green. So I'll mark a vertical line with where the stock will end this week. That would be for Friday, November 18th, which is the end of this week. And today is a Monday, so I will be putting in my trades today as usual. If I follow that channel up here, yeah, it looks like 105 or 106 would be the highest that this might go to. And if I make the bars more compressed, you can see that that is a pretty steep angle if that were to happen. So I don't think we're going to see the stock go up that high unless there's like a catalyst this week that I haven't anticipated. But usually when we have like a huge week like last week, I don't expect the stock to go up again by like $10. Because I think that would put the S&P 500 over 4,200 maybe. Let's take a look. Yeah, and that's the thing is you kind of want to also compare the underlying that you're trading with the broad market as well. So here's a look at the S&P 500, and you can see it's in a similar bear channel going down, very similar to Alphabet, except the thing is, if I zoom in here, this is very close to the top of the range. All right, so that's 41.10. I think it's going to meet resistance there before heading up. So therefore, if Alphabet has a positive beta, which it does, and the overall S&P 500 looks like it's about to hit resistance because we've hit it 1, 2, 3 times in the past and bounced off of the top of this channel, I would expect it to at least consolidate up here. Maybe it will go higher and break out of this, but even if it does, I think there's going to be some sort of consolidation before it moves higher. So at this level, around 41.14, that's only like a 3% move from today. I don't think Alphabet's going to move up like 10 or 11% again if the S&P 500 is going to have trouble moving past 3% higher this week. And that's the nice thing about weekly options is you don't really have to consider what's going to happen like in the next month. So I think 105 is pretty safe for the call. In terms of what put I wanted to sell, last week it started at 86. So I think around 86 or 87 is a pretty safe support level. But at the same time, I also want to lower my ACB. So I kind of want to have a put option somewhere around the low 90s. It's $95 right now, but if I sell at like 93, I can make some pretty good premiums there. And if it gets filled, then that would bring my adjusted cost from 101 down to below $100, which won't be a bad thing either. So let's take a look at the option chain and see what I can do here. I'll start with the put first. So 93, 94, those are pretty good premiums. So I'm going to go with maybe a 94 and also a 93. So that would be a pretty good pair of put options, which will give me some nice premiums, about $160. I'm going to go with 164, the bid.
Order filled.
Okay, so that filled at 164. Now, I also want to come down here to a 2.2 standard deviation of 87, and I'm just going to sell a small spread here. So let's go 87 and go down to maybe 84. So I'm pretty confident Alphabet is not going to fall there this week, just because if I go to the weekly chart again, that was the bottom of last week. And it doesn't make sense for us to be there again, especially when we had really good inflation numbers from last week, which was a big catalyst that boosted pretty much every stock. So unless something comes out of left field, the overall financial markets should be in a better position this week, and it should not go down to where it was at the very bottom of last week. So that's why I'm comfortable putting on this spread right here, delta at 3.8. Looks like I can make about 4 cents there, and maybe I'll put in 8 quantity. Now, finally, for the call option, I think 104 or 105 is pretty reasonable. You can see the deltas here. The previous week, when I sold the $96 call option, you can see the delta was 4.2, and I made like 6 cents per contract. So that was a 1 in like 25 chance that the stock would be in the money. And it actually did happen. The stock went up to 96 at the end of the week. Looking at the option chain this week, it looks like 104 is about that same level, and it looks like I can make about the same premiums again. So I'm going to sell this, try to get 8 cents, and I'm going to go with maybe 5 quantities this time. So I can make about $40. Now, I only have 300 shares, so 300 will be covered, and the other 200, if it gets called away, then I would actually be short Alphabet. But I think there's a very small chance that the stock is going to go up from 86 to 104 in 2 weeks. And if it does do that, then it would make sense for there to be a pullback anyway. So I wouldn't mind being short the stock or selling out all of my positions. Okay, I'm going to drop this down to 3.
Order partially filled. Order filled.
Okay, the 87.84 put spread got filled, and I'm just waiting for the 104 call to be filled.
Order partially filled. Order filled.
Okay, I dropped it down to 7 cents, so it filled on that new price. So for Google this week, I have 3 sets of options, and if I add up all the premiums, 5 times 7 is 35, plus 8 times 3 is 24, plus 164 for the 93.94 puts, and then subtract the commissions. Okay, so that's $212 US. The Canadian dollar has gotten a little bit stronger relative to the USD over the last couple of weeks. So if we convert that to Canadian, it'll be 283, which is not a bad week for premiums, and that puts me over $4,000 in terms of just earning net premiums. There was only 1 week where I lost premiums because I had to buy some back, but the rest of the time it's been pretty consistent, which is good. We'll have to see where the stock ends this week. If it closes at like $95, then I would be down $1 for the stock, but my premiums would have made up for it, and I would just expect my overall progression to be flat. So ideally, I want the stock to finish right between this line and this line. I would most likely make money from the stock appreciation, as well as all of my options being out of the money. So let's see where the stock goes by the end of the week. Thanks a lot for watching, and until next time.